Hello everyone, and welcome back to my channel. So, in our previous lesson, we learned what the US30 is, and in this video, I'm going to answer one of the most important questions every trader should know, which is what actually makes the US30 moves. Now, many beginners believe the market moves randomly, but that is not true. Every movement you see on the chart happens because of buyers and sellers reacting to information. Now, let me break this down to you. The first point here is institutional buying and selling. The biggest force behind the US30 isn't retail traders like you and me, it's large financial institutions. And these institutions include investment banks, hedge funds, pension funds, and other large investors managing billions of dollars. When these institutions buy a large amount of stock that makes up the US30, the index tends to rise, and when they sell, the index tends to fall. It's more like being a major shareholder in a company and you amass so much piece of that particular company. The moment you pull out your share from the company, the company will begin to go down. Now, this is why we say don't trade against institutional flow. Learn to trade with it. Don't trade against institutional flow, but learn to trade with it. Now, the second point is economic news. Don't forget, we are still talking about why the US30 moves. Economic news. You see, on this point, I have so much to tell you on it, but I'm going to need live chat example. So when we get to that aspect, you're really going to understand a lot of things about this economic news. Now, the US30 reacts strongly to important US economic news because these reports tell investors how healthy the economy is. Now, I believe you should be familiar with some of the most important reports, which includes the NFP, the CPI, many more. That's the GDP, that's gross domestic product, many more. And don't forget, we have the high impact news, we have the medium impact and the low impact. That's if you're conversant with the economic calendar, like the forest factory. I think there's FX market. So I use forest factory. So I believe their data is kind of very accurate for me. For me, very accurate. Now, when these reports are released, volatility often increases because investors rapidly adjust their positions, which brings us to the third point, which is company earnings. Remember, the US30 represents 30 major US companies, and when companies report their quarterly earnings, investors compare the results with expectations. Now, if many of these companies report stronger than expected earnings, confidence can improve and the US30 may rise. And if several companies disappoint investors, the index may come under selling pressure, which takes us to our next point, which is market session. You see this one now. Market session. The US30 trades almost around the clock through many brokers, but not every hour has the same level of activity. This is really, really important to the US30. Just like every other tradable instrument, the US30 trades almost around the clock, but not every hour has the same level of activity. Not every hour. For the US30, the most active period is during the New York trading session, especially around the opening of the US stock market, because this is when trading volume is highest Institutions often become more active and price movements are often strongest. Now, many experienced traders focus on this session because it tends to offer the clearest opportunity. You see, with US30, you must learn one thing, learn how to sit on your hands. And you see that patience is key. If you can have this patience, you're going to see changes for good in your trading. Now, speaking about our next point, which is market sentiment. Sentiment simply means how investors feel about the market, which is if investors are optimistic about the economy and corporate performance, they are generally more willing to buy stocks which can lift the US30. And if they are worried about recession, inflation, or other risks, they may sell stocks, causing the US30 to decline. Why is this important? Many beginners only look at the candles. Professional traders ask a different question, which is why is price moving? So, the importance of this video is to move you from beginner stage and converting you into professional traders. So you'll be able to see things differently from how the beginners see things. When you understand what is driving the market, you stop trading blindly and start making more informed decisions. And always remember, the chart shows what the market is doing, while the news and economic environment explain why it is doing it. So when you combine both, you become a more complete trader. So I said earlier, I'm going to be giving an assignment that's to prepare you for our next video. And here's the assignment. Before our next lesson, I want you to open an economic calendar and identify upcoming high impact US news and compare those times with your US30 chart and observe how price behaves. That's before, during, and after the announcement. Because this simple exercise will help you understand that the market doesn't move by chance. It moves because money is reacting to information. That will be all for this video. Thank you for watching. In our next class, we'll learn how to read the US30 chart using market structure so you can identify trends and start understanding where high probability trading opportunities are likely to develop. I'll see you in the next lesson. Thank you for watching.